Introduction: Why Fundamental Analysis Matters. Welcome to Fundamental Analysis Basics. Fundamental analysis focuses on understanding the real value of an asset by analyzing economic, financial, and market conditions. Unlike technical analysis, which looks at price movements, fundamental analysis digs deeper into what drives those prices. By the end of this session, you'll know how to evaluate assets by examining the broader market and economic landscape. 1. Key economic indicators. 1. Interest rates. Set by central banks, they influence borrowing, spending, and investment. Higher rates strengthen a currency but slow economic growth. Lower rates boost spending but may weaken a currency. 2. Inflation. Rising prices reduce purchasing power. Moderate inflation signals growth, while excessive inflation can harm economies. 3. GDP. Measures the overall health of an economy. Rising GDP often boosts stock markets and strengthens currencies. 4. Employment data. Job growth reflects economic strength, driving market confidence. 2. Company-level analysis. 1. Earnings reports. A company's profits, revenue, and outlook shape its stock price. Higher than expected earnings drive stock prices up. Disappointing earnings often result in declines. 2. Valuation ratios. P/E ratio compares stock price to company earnings. Debt to equity evaluates how much debt a company holds compared to shareholder equity. 3. Dividends. Regular payouts to shareholders indicate financial health and stability through news and global events. 1. Political events. Elections, policy changes, and geopolitical tensions impact markets. 2. Industry trends. New technologies or regulations can shift entire sectors. 3. Market sentiment. Positive or negative news can lead to significant price swings. Example: oil prices often rise during geopolitical instability. Conclusion: applying fundamental analysis. Fundamental analysis helps traders and investors understand why prices move and make long-term, informed decisions.